Welcome back. In today's special report video, we're going to be talking about the IREN difference. This Bitcoin mining company that has pivoted to the AI infrastructure and AI data center category of the market. I really wanted to do a little bit of a deep dive because on this channel, we have been extensively talking about the Bitcoin mining companies that pivoted to AI, but more specifically, the smaller ones, as IREN is the largest. It was called Iris Energy. They rebranded to IREN and basically became one of the major AI infrastructure providers for some of these large companies. And some of these companies have actually made some large multi-year deals with IREN to provide them with the compute power that they need to build out their AI stuff, right? I mean, think about OpenAI, xAI, Gemini, all of these different companies that are building the software, the large language models. They need compute power, they need energy. And they need fiber optic connectivity to connect to all of the different, data centers and compute all of this information to then bring you the end product, right? And these infrastructure companies, they're going to be paid and they're needed regardless of whether these AI companies like OpenAI are making any money or not, because regardless if they're making money, they need the infrastructure, they need the energy, they need the GPUs to be able to run their programs and try to make money. And so in today's video, we're going to be exploring IREN and understand, is IREN a good investment or is IREN overvalued? This is the Cryptoviser podcast. Make sure you guys are subscribed to this channel. That way you never miss a new video. We upload every single day to bring you the latest happening in the financial world. We've been uploading for many years, and I would appreciate if you guys at least give the video a free thumbs up. Let me know your thoughts down below on IREN. And we're also going to be comparing IREN to the other Bitcoin mining to AI infrastructure companies to understand, is IREN a good investment? Let's get right into today's video. So like I said, IREN is one of the Bitcoin mining companies. They were one of the biggest Bitcoin mining companies, and they become the largest Bitcoin mining company to AI infrastructure pivot company in the markets, right? And we've seen just in the last 1 year, in 2025, we've seen this stock go from $5 to about $77, right? Which is, if you just do the math quickly, it's about a 13x or 1300% increase. And generally speaking, this is amazing move in the price, right? And anybody who's been in this stock has done extremely well. You've outpaced pretty much the entire market. But is IREN a little bit overdone, right? Is it overvalued? I pulled up this chart and I compared IREN to NVIDIA, to Cypher Mining, to TeraWulf and Bitfarms, right? NVIDIA is the chip manufacturer, and they're really at the top of the whole AI situation with almost a $4 to $5 trillion market cap. And these other companies, these are also Bitcoin mining companies that pivoted to AI. And what you can clearly see here is on the 1 year chart, IREN has outperformed every single one of them. Including NVIDIA, right? I mean, IREN is up 230%. The next closest is Cypher Mining, up 216%. If you pull this year to date, it's the same thing. Since the beginning of 2025 until the end of 2025, IREN is up almost 400%. And that's from the beginning of the year. Obviously, if you look at the middle of the year, after we had a little bit of a dip, it's up 1,300%. You can see that on the 6-month chart right here. And so there is, extreme moves in the price of these stocks. But is IREN overvalued? Well, we need to understand a little bit more about what's going on with IREN and what their business strategy and business plan are. And so that brings us to this. Now, I want to start right here with the Google CEO talking about data centers. Now, the reason I wanted to bring this up first is because it's really important that you guys understand this is not like an optionality for these AI companies. These AI companies need the data centers, and even if they're going to build their own, in the interim, it could take years to get the permits, to get the equipment, to build them out, and then to open them up. It could take literally at least a year, year and a half, 2 years to do this. And so these companies are going to, in the interim, rely on these infrastructure companies that have the bandwidth, right? These Bitcoin mining companies, they have the fiber optic connectivity, right? Connection to the internet. They have the energy because Bitcoin is very energy intensive, and they have the warehouses for their Bitcoin mining machines. But in a bear market, the Bitcoin mining industry doesn't do that well. So this pivot to AI potentially can give them better revenue in a bear market, a Bitcoin bear market, than continuing to mine Bitcoin. And so in the interim, these companies, they need to utilize some of these other companies for their data center infrastructure, but they're interested in it and they're also talking about it regularly. This is on a recent Fox interview with the Google CEO here on the right. Let's listen in.
I mean, over time, at Google, we are always proud of taking moonshots. You mentioned Waymo earlier. That's been over a decade in the making. We're working on quantum computing. In that spirit, one of our moonshots is to how do we one day have data centers in space so that we can better harness the energy from the sun, that is 100 trillion times more energy than what we produce in all of Earth today. So we want to put these data centers in space, closer to the sun, and I think we are taking our first step in 27. We'll send tiny racks of
2027
and have them in satellites, test them out, and then start scaling from there. But there's no doubt to me that a decade or so away, we'll be viewing it as a more normal way to build data centers.
So he's already talking about building data centers in outer space, okay? I mean, that seems like a long way off, but again, that's how big of a moonshot. There's so much money going into AI and AI infrastructure right now because they need the data centers, they need the power, the energy. And on land, obviously, it's very restricted and it's limited, and that's why they're looking at outer space. But again, before we do a little bit of a more deep dive into IREN, let's compare IREN to the other large Bitcoin mining companies. This user on X said the latest power mining analysis podcast reviews the largest 4 HPC deals with Cipher Mining, Core Scientific, IREN, and TeraWulf and compares the benefits achieved from each deal. And he actually posted this chart that shows us what they're doing. So the initial term of these agreements, again, these are agreements with some of the large AI companies that have basically signed on board with these Bitcoin mining companies that pivoted to AI. And you can see the initial term for Cipher Mining is 10 years and 15 years. They have two different deals. Core Scientific is 12 years. IREN is 5 years. And TeraWulf is 10 years and 25 years, two deals as well. And you can see TeraWulf and Cipher Mining have much longer term deals, including Core Scientific, over 10 years, where IREN only has a 5-year deal. Now, some will look at this as a benefit. Some will look at this as a negative, right? Because the longer term, it's definitely longer term revenue and all of that. But IREN is not locking themselves in to, a deal for a decade or more. They're saying 5 years and then that's it. Then we'll reevaluate. And in my view, this is a much smarter term sheet just from how long it is, because it allows them to pivot. It allows them to change strategy, because in my view, within 5 years, there's going to be significantly more data centers available. And a lot of these companies are going to build out their own data centers and or potentially buy some of these large companies like IREN, Core Scientific, Cipher Mining, etc. Then if we look at the total megawatts of energy that they're signing on the deal, now you can see that IREN is the smallest out of all four. Core Scientific is 800 megawatts, Cipher is 600, TeraWulf is 640, but IREN is only 300. So when we're looking at this, I want you guys to go back to this chart comparison that we were showing you with TeraWulf, Cipher Mining, that IREN has the best price performance, but doesn't have necessarily the best or the longest term deal, doesn't have the largest energy load deal out of all of these. Now let's look at the contract revenues. Well, it has almost the largest contract revenue with almost $11 billion of revenue over the 5 years. The next closest is TeraWulf with more than that, almost $13 billion. You can see the estimated project cost at the bottom over here. IREN has the largest cost with $14 to $16 million per megawatt. That's the cost, not how much they're going to be making. Meanwhile, Core Scientific, it's only $1.5 million per megawatt. Cipher Mining is only $9 to $11 million per megawatt, and TeraWulf $8 to $10 million per megawatt. And so you can clearly see, just based on at a glance, they don't necessarily have the best terms, right? In terms of length of the deal, total megawatt expansion, and their cost. But what are there going to be revenues per megawatt? And by the way, some of this is what we've talked about recently with Jim Chanos, who's been a market analyst and market participant in the stock market, and his analysis on IREN and their deals that they've been signing recently. And he's been very critical of them. Now, Jim Chanos has been specifically critical of IREN because of its valuation, its move to the upside, the parabolic move to the upside, and also the deals that they are signing. And you can see at a glance, it definitely looks decent, the deals that they're signing, right? All of these companies. But when you think about it, they have a very high cost. And the reason, one of the reasons at least, that they have this very high cost compared to their competitors is because IREN is providing all the GPUs. So effectively, I think it's Microsoft that has the deal with them. Microsoft signed on to utilize their infrastructure and compute capabilities. And so Microsoft is not buying the machines. IREN is buying the machines. So IREN has to deal with the depreciation of these machines. And by the way, keep in mind, it's the same deal in the Bitcoin mining space. If you buy a Bitcoin mining machine today and plug it in 1 year, that machine is already old, right? In 2 years, it's very old. In 3 years, it's basically, ancient. And 4 years, that machine you may as well not even use because there's newer machines that mine faster, that are keeping up with the difficulty of Bitcoin mining increasing and use less energy. So overall, as new machines are created, as time goes on, the old machines become obsolete. And so by IREN owning the machines and effectively renting them out to the companies that they're doing these deals with, it puts all of the risk and liability on IREN, not on Microsoft or whatever other company is signing on board with them. And this is one of the big critiques that Jim Chanos has had, and I've called this out on my channel, and a lot of people are like, but Cryptoviser, it's not that big of a deal about Cryptoviser. And I'm like, well, just look at these term sheets. Like, they're making more revenues per megawatt, but their cost is also significantly higher. So when you plug all those things in, after 5 years and their deal is done, effectively all the machines that they have are going to be worthless, right? Because as time goes on, AI compute is going to become more efficient, meaning the machines are going to be able to compute faster. And so the machines that are created today to compute for AI and data analysis is going to be basically useless because the machines in 5 years are probably going to be way better. And the need and the amount of data that it's computing is going to be significantly higher. This is a huge issue and risk for IREN. And this is why a lot of people are saying that IREN is overvalued and that there's a lot of risk involved here. But we're also seeing other things happening with IREN. Now, this user, who's a market analyst, said IREN is building Horizon, which is a data center with 750 miles of high bandwidth fiber and 2 100 megawatt GPU superclusters. AI demand is scaling faster than traditional build timelines, and IREN is one of the few operators that can deliver the power, secured capacity at the speed this cycle now requires. Now, I would agree that right now they are on top of the game, but this is a very, very high cost. And you also have to remember that these companies like Google, Meta, Amazon, they're also creating their own data centers. So right now they have to utilize and rely on these other companies for their data center capacity. But as you can see from this term sheet, IREN has no extension option. So that means that the deals that they're making right now, they may not continue they may just walk away after this. So they could be, if it's Microsoft could be creating their own data centers, and after 5 years, they just move all their compute into their data centers and say, good luck, IREN, and goodbye. And then IREN has to figure out what they're going to do from there. But keep in mind, their costs are going to continue to stay elevated because they're owning the GPUs. They're not just renting out their energy, their warehouses, their expertise. They're renting out their actual GPUs, which means they own them. This is different than other deals that are happening in the AI infrastructure space where companies are saying, we'll give you the power, the energy load, which is really what they need right now. I mean, you heard the Google CEO talking about going into outer space and harnessing the power of the sun, which is effectively free once you get the products there. But this is very different than what IREN is doing. We've talked very extensively about Bitfarms, which is another Bitcoin mining company that pivoted to AI. And and Bitfarms, they don't want to own all the GPUs. Granted, from my understanding, they're buying some GPUs and they're going to be renting out the GPUs as a service, but that's not their main business. Their main business is securing the power infrastructure. Because if they own the power, they can rent out the power to these companies who need the power to run their AI data centers. That is the key, in my view at least. And so, yes, right now, this is very, very good. And this is amazing and really good developments for IREN. But in the medium term, right, in the next 2-3 years, this could actually backfire where IREN built out all these facilities, owns all these machines, and they spent most of their money on that versus just securing the power and renting that out. That's a huge risk. Now, how it's going to play out, I don't know. Right now, there's a lot of speculative moves, specifically from a price perspective. And this is where, I mean, if you look at this chart if you just erased IREN and you just said, look at this chart, does this look like a parabolic move to the upside and potentially we're going to have a correction or a corrective phase? I mean, the answer is yes. But a lot of people don't think that will occur. And that's really what this video is about, to really analyze whether we are going to have a correction, whether the valuation is overvalued. And this is kind of what we're talking about, right? Right now, it probably sounds like it is overvalued, but I'm going to explain why it may not be. Now, this is directly from IREN's own page. It says Horizon is a new class of infrastructure purpose-built for high-performance AI workloads. We're integrating 750 miles of high-bandwidth fiber to create 200-megawatt GPU superclusters, as well as flexible rack densities so we can deploy not just today's chip technologies, but the next generation. IREN's COO has shared the latest progress in this video that we've been kind of playing in the background. This user on X said this. He said, IREN just put on a CFO masterclass, chief financial officer. They officially closed a $2.3 billion raise, and the terms are honestly insane. Essentially, it's free money. The interest rates are only 0.25% to 1%, and that's practically zero cost of capital. It's a smart refi. They use this to wipe out old risky debt that had high rates and low conversion prices. And they bought capped calls to protect shareholders from dilution all the way up to $82 a share. The result? They just extended their runway to 2032, lowered their interest payments, and secured a massive war chest to buy more GPUs and Bitcoin miners. The balance sheet is now a fortress. And this is true. I mean, if you look at IREN's own website, in their investor relations section, it says, IREN announces the pricing of ordinary shares offering to fund the repurchase of convertible notes. Now, this release says, IREN today announced the pricing of registered direct offering of about 40 million shares at a price of $41 per share to a limited number of purchasers. So effectively, this means that they're issuing new shares on the market, right? They're selling shares of their stock on the open market or on a private market. Now, this is somewhat good because they're doing it to investors, I would imagine, and these investors probably are not going to sell their shares immediately. But it is dilution of the stock. It's the same thing that MicroStrategy is doing, right? They're selling shares to raise money. But MicroStrategy is selling shares on the open market, right? So they're immediately and directly diluting shareholders. Where this, it's most likely not a direct dilution because the investors that they're investing with are probably not going to sell the shares immediately. The aggregate proceeds of the offering will be with a repurchase of their existing convertible notes and existing 2030 convertible notes. And so effectively, they're rebuying their debt, as that user on X explained. And they also closed a $2.3 billion convertible note offering in the repurchase of those existing notes. This is the full breakdown. They offered $2.3 million in convertible senior notes, $1 billion at 2.25% interest, $1 billion at 1% interest, $300 million green shoe fully exercised. Don't even know what that means. Capped call transactions are expected to provide a hedge upon conversion up to an initial cap of $82 per share. And basically these capped calls, I think Bitfarms has done the same thing. It effectively, they are, it's to protect in case there is selling of some of these shares that they're selling into the market. No put option for investors in the notes other than a customary put right in the case of certain fundamental changes. And you can see here that they repurchased $544 million of their existing notes at 3.5% and 3.25%. So they basically now have much lower interest, and they repurchased or wiped out their higher interest debt. The combined transaction raised net proceeds of approximately $2.27 billion, lower average annualized cash coupons, and extend maturities on outstanding convertible notes. And so, yeah, this is good that they're kind of restructuring their debt, raising more money, and but they're also issuing shares. And whenever I see issuance of shares, regardless of where we are in the cycle, it's concerning, right? Because I don't want to hold a stock. Like if you think about MicroStrategy, from the middle of 2025 to the end of 2025, MicroStrategy is down 60%. Meanwhile, Bitcoin went to all-time record highs. Why is that? Well, MicroStrategy continued to sell shares on the open market, and that was continued dilution of the shareholders. And so why would you continue to hold a stock if the company behind the stock is going to continue to add new shares of the stock? That doesn't make sense. Now, in the case of IREN, they're doing it in a way that is more protective of the shareholders. But does that mean that we're only going to have upside and no downside? I don't know. We have to still dig a little bit deeper. Let's look into the Q1 of 2026 results. So this was released in November, and it shows the financial reports up to the end of September of 2025. Now, their financial results show that they targeted $3.4 billion in AI cloud annualized run rate revenue, which is ARR, at the end of 2026. They secured $9.7 billion contract with Microsoft. That's what we talked about a little bit earlier. It's a 5-year term, 20% customer prepayment, and $1.9 billion of expected annual run rate revenue contribution. Their new multi-year contracts include Together AI, Fluid Stack, which is Google, and Fireworks AI, supporting growth to target AI cloud ARR of over $500 million by the end of Q1 2026. Now, keep in mind, end of Q1 of 2026 is basically April of 2026, so just a few months away. And if we are in a Bitcoin and AI bubble pop or downtrend, well, it's going to be very interesting to see how this all plays out, right? Because you have to remember, even if the AI bubble popped, these companies that are the infrastructure providers, they're not really part of the bubble because they're going to continue to get paid regardless. Because if NVIDIA and OpenAI and Google Gemini and XAI and all of these other AI companies have a drawdown in their valuations, in their investments and all of that, they still have these agreements to, and they, by the way, they're not stopping their AI development or growth, which means that they still need the infrastructure to run the AI. So in a way, this is kind of like guaranteed that it's going to continue. Now, I do think there may be a shakeup where some of these companies get cancellations or don't get paid, or the contracts are breached, potentially. I don't know that that's going to occur, but for these companies to continue to run their AI and develop their AI, they still need the infrastructure. So in a way, they have to. These companies like IREN are going to continue to get paid regardless of if the AI bubble popped or not, right? There may not be expansion into more contracts, but the contracts that they already have, and this is why I think a lot of these companies were pushing very hard at the end of 2025 to make the announcements. Oh, we have a contract. Oh, we have 2 contracts. Oh, we have 3 contracts. Because by securing the contracts, they're securing revenue, even if we go into a bear market or a recession or a downtrend in this AI sector. And so the revenues look fairly good, right? But again, we are still in a bull market. And so where does that leave us with IREN? Well, this user on X said the IREN CEO, Dan Roberts, says the company is targeting a total of 140,000 GPUs by the end of 2026. Let's listen to what he says here. And by the way, don't forget to give this video a free thumbs up. We upload every single day. You can also become a channel member by clicking the join button down below. But if you don't want to become a channel member and you want to watch these videos completely for free, at least hit the subscribe button. That way you never miss a new video. All right, let's listen to the CEO of IREN.
On that note, we're excited to announce a further expansion of our AI cloud service, targeting a total of 140,000 GPUs by the end of 2026. This next phase includes the deployment of an additional 40,000 GPUs across our Mackenzie and Canal Flats campuses, which are expected to generate in the order of $1 billion in additional ARR. When combined with the $1.9 billion expected from the Microsoft contract and $500 million from our existing 23,000 GPU deployment, this expansion provides a clear pathway to approximately $3.4 billion in total annualized run rate revenue once fully ramped. Importantly, this incremental 40,000 GPU build-out will be executed in a highly capital efficient manner through leveraging existing data centers. On that note,
now, this sounds really good, right? $10 billion in annual revenue. But one of the things that we have to keep in mind, and this goes back to the Jim Chanos concerns, and if you guys are not aware of Jim Chanos' concerns, just type in IREN Jim Chanos, and you'll be able to see some of those. But effectively, number one, they're not at that annual run rate yet. Okay, they're talking about at the end of 2026, once they have all these GPUs online and on board. And number two, this is not their profit. This is just their annual revenue, right? What they're making in from their contracts. And so we have to keep in mind that they still have a very high cost. And a lot of this is because they own the GPUs. They have to service the GPUs. They have to depreciate the GPUs. And so that's going to cost quite a bit of money. And so for these companies like IREN, there is still a little bit of a time from now until when they're going to achieve these numbers. And the numbers that they're going to achieve, 10 or $11 billion in revenue, doesn't necessarily mean profit. And so if they're making $11 billion and they're spending $10 billion on the infrastructure and the build outs, they're only really making $1 billion, which is still a lot of money. But is it grounds to have a $14 billion market cap, right? And we have to keep in mind that would be a 14 earnings ratio, 14 times what their earnings are, what their actual earnings and profit is. And so I don't know. I mean, just looking at the chart, it looks like IREN is due for a correction. Now, a lot of people will say, but they're in a new sector. They're in AI. And I agree with that. But we also know that AI is in a bubble, right? And AI is doing a lot of circular financing, and they're doing a lot of speculative investments right now. And if that pulls back, and then it's really going to pull back the whole ecosystem. And we also haven't seen if these companies are actually going to be able to acquire all of the equipment that they need, because it's not just IREN looking for the GPUs and the infrastructure to build out these data centers, plus the energy that they're going to need. It's all the other companies as well that are doing the same thing. And they're all competing for the same energy, for the same equipment, and for the same power sources that IREN is looking at. And so if there's a pullback, generally speaking, and a supply shock in the build-out side, which I think there will be, how big it is, how much it affects the industry, I don't know. But I definitely think that we probably have more downside to go in the medium term before we see more upside. Because remember, the market prices these things in. That's why we saw this parabolic move to the upside. Buy the rumor, sell the news. And so what other rumor do we have? We already know they're building out. We already know that they are getting contracts. And we know also that there's potentially an AI bubble and potentially a lot of circular financing that is going to maybe not work out the way that people thought. And so am I bearish? No. Am I bullish? No. I'm more neutral at this point, right? I don't have a position bullish or bearish on my macro thesis, right? In the short term, after I'm recording this video, I do think that we have more downside before we have upside, right? So I do actually have a bearish position on the stock, but on the industry and the medium and longer term, I'm kind of neutral at this point, because I really need to see how these AI companies are going to make money, how they're actually going to grow, what more they're going to need, and if it's going to be profitable. Because remember, Bitcoin mining continues to grow, continues to get harder. The machines continue to get more efficient. They take up more power, but Bitcoin mining is not really more profitable today than it was 4 years ago. It's basically the same. Maybe a little bit more, right? But not substantially more. And that's why a lot of these Bitcoin mining companies have pivoted out of Bitcoin mining to AI. Because number one, they can get on the ground floor and 13x their stock. Number two, they have all the infrastructure needed so they can charge whatever they want to these companies that are signing on board with them. But the same thing happened with Bitcoin mining companies in the previous cycle. Many had to restructure their debt. Many went bankrupt. And many just didn't make as much money as they thought they were going to. And so we have to really monitor this whole sector, and specifically IREN, because IREN is the largest from a market cap perspective, from a sentiment perspective, and potentially from a contract execution perspective. So I'm not bearish, I'm not bullish in the long term. I'm kind of neutral until we see more signals from the AI sector of where this is going for the infrastructure companies. Hopefully you guys enjoyed this conversation. Let me know your thoughts down below. While you're down there, don't forget to give the video a free thumbs up, hit the subscribe button, and check out my other videos on this channel. We upload every single day. See you guys on the next one. Thanks for watching.